What's up, traders? I hope you guys had a fantastic trading day on Friday. Today is Saturday, October 29th. Um, what a day! Huge rally. Dow Jones up 833 points, and the rest was history. And let me show you, as you actually can already see on your screen, that is my call that I bought on Thursday. I did not sell on Friday, even though it was up 115%. I did not sell. Why? Because I saw something in the charts that says this rally is going to continue on Monday and probably into Tuesday to get ready for the Wednesday uh, FOMC rate hike. It's not so much the rate hike. Everyone already expects 75%. It's what Jerome Powell is going to say on at 2:30 p.m. Eastern Time after the rate hike is released at 2 p.m. It's what he's going to say that's going to determine if the market rallies higher or if it goes crashing down. Okay? And so I held on. I think Monday's going to be a nice big up day, and we're going to get into exactly why I say all those things. But let's first get into Friday morning. Okay, like always, you see here I have the 1 minute, 5, 30, and 65 minute, and I've drawn in the 65 minute, 30 minute, and 5 minute on the 1 minute time frame. You know, I think that it could be useful if you're kind of starting out and trying to figure all this stuff out for you to do the same thing. Go ahead and draw that support or resistance line, these lines into your 1 minute chart. If it helps you kind of figure out, navigate the day as it goes along. I don't do that so much because I just look left and right, right? I just like, oh, okay, I see what's going on in the 1 minute. I'm looking on the 30-minute real time, and I'm seeing, okay, I see where you're going. I can see where I can see, like in this example, I see where you're headed, you know, or I can look at the 65 minute and say, well, if you just blew past the 30 minute like it did, right? It just immediately at opening bell, boom, it just took off. So it, it headed to the 65 minute. That's exactly where it went to. See that? It I'm drawing this arrow right here. Boom! It actually headed that. It did touch it. In fact, not only did it touch it, it backtested and failed off of it. See that right here? Look at that. That's perfect. So it while it did blow past the 30, let me zoom in. You notice something? The top of that 5 minute, oh sorry, the top of that 1 minute candle touched the 30. The bottom of the next candle touched the 30. See? So it's not, it is that it did blow past it, but it wasn't, there's a reason why. The top of that candle stopped and the bottom of that candle started, right? I guess that's my point. Now, now, check this out. Look at the 5 minute right at opening bell. I mean, out of the box, it was already crazy above the EMA 50 right here. See that? Look at, I drew this blue arrow to show you that. How high was it? That's crazy, crazy. Okay? Crazy power is what I really mean to say. Now, let's let's take the EMA 50 of the 5 minute and let's actually go to the 5 minute chart right here. That's what that arrow is. Again, on the 5 minute chart, it's way above the EMA 50 line. Okay? So that is just more evidence of power when it's just out of the gate. It's starting above there. It doesn't have to earn its earn the surge, right? Earn the upward movement. It started up there. So that gives you an idea. It gives you clues of how the day's going to go. And so um, let's see what else. What else do I want to point out for this screen? Okay, the 30 minute. Here's the 30 minute. Again, it's giving you clues. 30 minutes already in. This is pre-market during the shade in the shaded area, going up, Chaikin Money Flow going up. RSI. This is the MACD is probably my favorite. RSI is my second favorite, and Chaikin Money Flow is probably my third. But look at RSI in the 30-minute chart. Higher highs, higher lows. Is ready to roll. Okay, it's getting ready. The RSI is getting ready in the pre-market. Now, let's look at the 65-minute. Look at this. The 65-minute RSI. Um, it was going up, and then it went straight up. Even in pre-markets already, before opening bell. You see that? It's clear. Before opening bell, it's starting to go straight up, and that is just irrefutable evidence that there is significant power in the markets before the bell even rang. Okay, it just on all levels. The well, heck, here's the 1 minute. Look at that. I mean, this is the 1 minute, right? Confirmed by the 5 minute, confirmed uh, by other indicators on the 30 minute on the larger time frames. So, so look for these clues. Basically, is where I'm getting at, especially on the larger time frames. That's going to tell you that the 30 and the 65 is going to really give you that foundational view of how the day is going to go. That's how I view it. Think of it like a foundation of the house, right? The concrete that supports the whole house. Is the foundation coming into the day strong, weak, or neutral? Right? It could be neutral, right? You could be in a trading range and it's not strong at all. It's just kind of neutral. Um, that's what you look for in the 30-minute and the 65-minute, or higher if you choose to go 130 minutes, 195 minutes. I'm going to show you that in a little bit as well. You can go higher than that. That's fine. Uh, but I like the 30 and the 65 uh, uh, as a monitoring tool throughout the day. Okay. Here's the next slide. Okay, this is the classic back test. Essentially, the tone that set the day was in the first, what, 5, 10, 15, 20, 25, 30, 35, 40, 45, 50. 50 again, see? The first hour. The first hour set the tone for the rest of the day. Okay? And I'm showing you this time only the 1 minute and the 5 minute chart. And once again, drawing in the 65, the 30, and the 5 EMA 50. And you saw here that, from opening bell, it rocketed straight up to the 65. Let's go ahead and zoom on in that. Zoom in, zoom in, zoom in. It rocketed up to the 65, back tested, back down to the middle of the Bollinger Band. Oh, this is the 1 minute, by the way. To the middle of the Bollinger Band, came up to the 65, failed, came down to the lower Bollinger Band, shot back up to the upper Bollinger Band, failed, came down to the lower Bollinger Band and the lower uh, 1 minute, 5 minute EMA. See that? See, this is all crazy action. Okay, this is all crazy action. Came back up to the middle of the Bollinger Band, and then comes down to um, the 30 EMA. See, so it rocketed past that all the way up to the 65, but ultimately retraces back to the 30 and kisses it. And that was it. That was the final backstop. That was the final one, and then it just went boom, boom, boom after that. Okay. Now, so the question is, boy, ultimately, this whole trend, this whole downward trend right here is the back test, right? It is the back test, and I have the 5 minute chart over on the right hand side. See how the 5 minute chart is much smoother, right? You're not you're not reacting to all this crazy stuff. It's much smoother. But I put these blue arrows in here because I want to call your attention to these wicks. There's a wick, a wick, a wick. That means that's crazy buying power, pushing the candle body back up, right? That gives you an idea that, oh no, we're not going down. Not right, not today. Okay? We are not going down today. So it's wick, wick, wick. So, but before you get the wick, obviously you're going to have that big red candle, right? A full body red candle coming down before the wick appears, right? So it is it is something that you got to be patient, right? So first of all, you shouldn't have, if you follow the traditional rules, you would not have bought at all right here in this upward surge, even though it's tempting to, because you wouldn't have really lost much. Because ultimately, let me point out, when it retraced here. Well, let's go to the immediate left. It basically retraced 50% of the initial surge up. So had you bought, let's just pretend that you caught the surge right here, right? Right here, basically at the 30-minute time frame. Let's say here's opening bell, and you caught the surge right here. You bought calls right here. Technically, I would argue you didn't gain anything because we did go up, but ultimately in the end, about an hour later, 45 to 50 minutes later, you are right back where you started. So had you bought this right here, an hour later, you're right back where you started. So what did you gain by buying it right here, anticipating the surge, right? I would say you risked a lot more because what if that 30-minute did not hold and we started going south? Okay, there's the lesson of the day. Wait for the back test. You have to wait for the back test because you don't know how far down that back test is going to go. Nobody knows. I don't know, right? Okay, now, so I pointed that out that if you start seeing wicks, okay, that's a good sign. That's a good sign. That's a good signal. But I want to point out something that's actually quite important. I would say this is it's for me a hard and fast rule. How do you know when something is just a pullback dip? I say pullback and dip to be the same thing, right? Pullback, dip, back test. How do you know the difference between a pullback, dip, back test versus failure? Like, let's just pretend, hypothetically, it did not successfully backtest this 30-minute EMA 50 yesterday, pretend, and it went south. What gives you confidence it's not going to do that? It's not going to fall. It's just going to dip. Okay? I would contend to you on the 5-minute chart, as long as the MACD, either line, either the MACD line or the signal line, I don't care, either line, as long as both lines stay above zero, it's going to be just a dip. And I'm going to show you Thursday's chart to demonstrate the one that I made the mistake when I went ahead and did what I just said don't do a moment ago here, and when I said if you would have bought right here and not waited for the back test, it can come back and bite you, and that's exactly what happened on Thursday. And I'm going to show that momentarily. But for now, I want to show you just on the 5-minute chart, as long as both the MACD lines stay above zero, which is this dotted line, it's just going to be a dip. And that evidence is further corroborated by just these wicks, these wicks, these wicks. Okay, it's like no, the market's trying to hold up whatever we're trying to do. Okay, Chaikin Money Flow also evidence that it's probably going to be just a dip because look at see this arrow is aligned with this arrow. Money flow is going back up even while that price is going down. Okay, it's bullish divergence. Okay, that's the point of that. And actually, I can also see that I didn't draw an arrow there, but the rate of change, the red line, is starting to come up as well. See that? It's starting to come up, and then it just boop took off. That's bullish divergence. Bullish divergence on the Chaikin money flow, bullish divergence on the rate of change. Okay, with the wicks. But the big dog is the MACD on the 5 minute. It's way above zero. That's not going to fall on you. Okay, let me show you an example of when it does fall on you. Thursday. This is, oops, let me show you. Okay, this is Thursday. Okay, remember this? Thursday at opening bell, it dropped, it surged, and I got in right around here, right? Right around there. Surged up, only to fall and fail the rest of the day. What happened? Here's the initial, here, okay, so here's the drop and surge. Here's the drop and surge. But look what happens. The peak just barely even gets back to the zero line on the MACD. That spells trouble. The MACD red line, the signal line is below the zero. The MACD line barely gets above it, like it does a peekaboo, peeks its head above it. Essentially, in this case, it's coincidence that the zero line on the MACD is the EMA 50 and the SMA 20. See that? It just pokes its head above it and then it fails the back test. See that? It fails the back test. Pokes its head above the EMA 50, comes back down, fails the back test. Oh no, that's the first sign of trouble. And the MACD corroborates that. The MACD, when it fails the back test here, let me zoom in. Here we go. When it fails the back test here, it's curtains. Look at that. The MACD just goes well below zero. Look at that. Look at how far it's going down. And I'm like, oh no, that's a problem. Okay. So that's to answer that question. How do you know if something is going to dip or if it's going to fall? Okay. In this example on Thursday, I call this a fall. It's going down, and it ain't coming back up, and it didn't. It didn't either. Okay. Now, so that's what I wanted to show. I drew this a vertical blue line in here so you can kind of see here. See this? Look at the indicators. At the peak, this is the peak of the price, peak of the surge up here, up top. But the indicators are already going down, going down, going down. See? MACD, peak. Oh no. It's already quite telling that the peak of the MACD just barely scratches the zero line. That's a problem. Okay? That's like, we got a problem. And that's exactly what happened. It went down and it stayed down. Okay? But again, let me show you Friday. Night and day difference. Just, yep. Look at Friday. MACD. MACD didn't just poke its head above like it did on Thursday and come down. MACD was up and it stayed up. That's not going. The markets aren't going down. The markets can dip, sure. That's what it does. It dips, back tests, but it is not going to fail. Okay? I think that is a critical observation you have to make. Where is the MACD relative to the zero line? And I've been preaching that in all my other videos. That's how you know it's going to fall versus just dip. Okay? Yeah, if you yeah. So I think that's actually a quite an important and essential observation to make. And let me show you. Let me that's a good lead segue into. Let me see, is it this one? Nope, this one. Okay, that's a good important segue. Uh, dips versus falls, and so because and if you guys are going long, you want to know, oh, is this gonna dip or is this just a dip or is it gonna fall on me? Okay, the the this is the 1 minute. This is more towards the afternoon. Yes, 1 p.m. ish. Afternoon. After yeah. So look at this crazy whipsaw action. Notice this is the black resistance line. That's equivalent to this black resistance line, and that's that black resistance line, and that's that black resistance line. Notice that it's whipsawing, straddling the line, right? Down, above the line, below the line, above the line, below the line, above the line. Same on the 5 minute. Straddles the line. Below, up, above the line, kind of below the line, but then it makes a decision. Okay? So in a lot I know you'll find that a lot of stocks channels, well, basically you have lower highs, lower lows. This could be you'll hear as a bullish channel, right? Bullish divergence, because you can draw the line here and draw the line here. And that's a downward channel, which a lot of stocks channels describe as bullish. Uh, it's bullish, or they'll say, well, 75% of the time it's bullish, 25% of the time it's bearish. And what I suggest is that 75-25 is better explained by, well, the MACD is still above zero, so it's like 100% is not going to go down. Okay, see that on the 5 minute, it is starting to go down. Like, never mind that the red line has crossed below the signal line. Who cares about that? The fact that both lines are above zero, you're fine. It's not going to fall on you. Just wait. Just be patient. So if you're stressing out like, whoa, look at this fall, like from peak to trough, you're like, whoa, this one was lower than the last one, or look at this one. It's like, oh, that's a pretty steep drop. Just look over to the MACD. Did the MACD cross below the zero? Or, are if this line, if this MACD right here was way closer to or even hugging the zero line, then I would start to really be paying attention. Pay attention. Now you're on the 50-50 flip a coin. Like, are we gonna fall or are we gonna go back up? But the fact that it's so far above the zero line, I'm like, oh no, I'm not worried about that. I'm not worried about that. Okay? So just keep all that in mind, because I think it's critical into whether you um, sell, right? If whether you bite down on that drop, you're like, oh, it's dropping too far, sell it. Like, here's my, I'll just say, suspicion. It dropped to exactly this point for in this example, right? I'm just throwing out it. I'm giving you an example right here. It stopped right here at what, 2117 ish. It chose that point exactly. because I suspect, you know how the vast majority of traders put stop losses in, right? And understandably so, you should. It limits your risk, right? It limits your loss. You say you're willing to accept a 7% loss, so you set your stop loss accordingly. Okay, I get it. Totally understandable. But at the same time, I think I will also say simultaneously that now you've also told the market algorithms where you are hiding. Okay? I'm just going to make that point that while I understand why we all set stop losses, you've now also told market algorithms where your pain points are. Where are you willing to tap out, right? Because your stop losses are in the system, and the algorithms now know where you're hiding on the battlefield. And I suspect, this is strictly suspicion, I cannot prove it. I think the market algorithms go down here to get the last of the stop losses and then shoots it back up. That is my suspicion. Okay? So I'm not saying don't play with stop losses. I'm just saying I think that exposes you at the same time. It both protects you, right? But it also exposes you simultaneously. It's like a double-edged sword. Okay? So that's all I'm saying. I'm not saying don't set your stop losses. Go ahead and set your stop losses. Uh, I'm just making that point. Okay? Now, what am I talking about here? This is also important. Support resistance is not equal to, exclamation equal to, not equal to EMA SMA. Support resistance is less than EMA SMA. I'm just basically using shorthand because I don't have that much real estate to write this. What I'm talking about is when you're talking about support or resistance lines, it's okay. This is the 5 minute. It's okay for the candles to straddle the line. Remember how I say it is taboo? It is taboo for the EMA or SMA lines to be straddled, but it's okay for the support and resistance lines to be straddled by the candle body, right? See that? I mean, it's clear. It's straddling it. Above it, below it, above it, below it. The resistance line is going right through the body of some of these candles. It's okay. But I want to call your attention to something. See this gray line? Well, that's simultaneously the 20 SMA and the middle of the Bollinger Band. It's not okay to straddle that one, right? That's your taboo. And notice how the minute the candle finally catches up to the middle of the Bollinger Band or the SMA 20, it gives you a doji right through the line, meaning, uh-oh, I need to make a decision. And that decision point was up. So by the time it did reach either the EMA or the SMA or the middle of the Bollinger Band, it has a decision point to make, and it made it. See that? That is not a coincidence. While all the while I was just kind of playing around on the line, on the resistance line here, it was playing, playing, playing. It's as if you're just playing with your kid brother or sister, just playing around, but now mom and dad are coming home, and you need to make a decision. What are you going to do? And it made the decision. That decision was up. But at the same time, there are other things like I showed you, MACD was above, you know, or the 30, the 65 minute was just crazy up. It's no surprise that it went up. My point is just that it had to make a decision now because it is now reaching the EMA, the SMA, or the middle of the Bollinger Band. It has to make a decision. Okay, so that's what I wanted to show you on this slide. Anything else? No. Okay. One final thing. Let me show you this chart. DQQQ 195 minute, which is uh, 3 hours and 50 minutes, which is exactly a half day. Look to the far right. Now, okay, yeah, see that? Look to the far right here. When I highlight that, the MACD line on this is the 195 minute. This is the biggest time frame that I use. That includes yeah, pre-market intraday. That's the gray vertical bars. That includes that, which is 3 hours 15 minutes, which is also close to the 4 hour time frame that I'll also show you. So look at that. The MACD line is at 0.15. That's above zero, guys. The signal line is 0.02. That's above zero. The MACD line has crossed over the zero line into extended hours. This is huge because this is signaling a multi-day rally. Because the timeline is so big, it takes a lot. It takes a long time, like a whole day, like it did today. It takes an entire day to make the 195 minute MACD line cross over into the positive and over the signal line. Okay? See that right there? It is irrefutable. Irrefutable. It has crossed over and it is ready to roll. Last time it crossed over, what happened? Right here, day one, day two, day three. So that is suggestive of equivalent to Friday, yesterday, Monday, Tuesday. Okay? Because this is a 195 minute time frame, it's smooth, right? It's a smooth line. It's not jerky like the 1 minute, obviously, right? So it takes a lot for that momentum to just reverse. It's like once that train's up to full speed, you can't just stop it, right? You can't just make a 95, sorry, yeah, or a 90-degree turn on the railroad track. It's not going to do that, right? So 195 minutes crossover of the MACD into across the zero, above the zero line is huge, huge for moment. It speaks volumes for the momentum that's coming. So yes, I do believe this rally will continue into Monday and likely Tuesday in and it probably will go into a holding pattern on Wednesday in preparation for the 2 p.m. rate hike announcement and 2:30 p.m. Chair Powell discussion. I think that holding pattern is going to wait on Wednesday. Okay, it's basically Wednesday. I think leading up to the FOMC meeting on 2 p.m. on Wednesday, I think Wednesday is going to be kind of more or less of a flat, or it's going to trade in a range. It's not going to just. I don't think so. At least I think it's going to trade in a range on Wednesday, but I think Monday and Tuesday are going to be up days. Okay. Last thing, let's show you, yes, the 4 hour chart on NASDAQ futures. I drew this line. Look at that. This is the line, trend line. You see how it perfectly, this is no coincidence, it just perfectly hit that line. It closed right at the line. Perfectly. Let's see on Sunday if on Sunday when futures opens back up, let's see if it gaps up above the line. That's what I want to see. Basically, it takes when you gap when futures gaps up above the trend line, you've basically taken the battle out of the investor's hands on Monday morning. It's like, oh, there's nothing to fight. It's already above the line, right? Otherwise, if you put it in investor's hands, well, are you gonna take this resistance line? Are you not? Are you gonna fall? Are you gonna rise? Right? You see what I mean? When you gap up, you can always revisit that gap, come back down and back test the gap like 2 or 3 days later. But you don't have to, just because you gap up on Monday, it doesn't mean you have to retest it on Monday. You just gap up and just like, well, we're just gonna take that fight out of the right. We're just gonna gap up right here, take the fight out of the hands of the markets, and then we're just gonna continue to go up. Right? That's a possibility. We'll see. We'll see. So look down here. Let me zoom out so you can really see it. See that? This is what I was talking about on Thursday night. This is the 4 hour. Look at this low and look at that low. This was when the night was darkest. Remember, this is when Apple and Amazon report earnings and they got clobbered in extended hours, right? That's when the MACD just went down. But still, that is higher than that. That was Thursday night. See that? I drew this line in there so it's clear, irrefutable. And now look at this. On the 4 hour, the MACD crossed over, and now it's in the positive. Not only in the positive, it's crossed over the signal line. But more importantly, it's in the positive, right? So I think we're like in this example when it crossed over into the positive, you were going to be in for one of these patterns, this, and this coming into Wednesday. Yeah, I think it's gonna look similar to this. This is gonna be Monday. Do a little back test in the futures. It's yeah. Okay, so expect possibly Monday to gap up above, which would have been above this line. Gap up. Monday is an up day, but Monday night futures will look flattish to down. But then I think Tuesday is going to go up again, and then possibly go up even more in extended hours, and then be a holding pattern coming into Wednesday. So that's what I think it's going to do. Could be wrong, but based on the weight of the evidence that I see so far, that's what I think it is going to do. So, all right, that's all I got for you for Friday's wrap-up session. Hope you got something out of it, and we'll I'll probably do another video here maybe tomorrow um, about swing trading and that sort of thing. So all right, that's all I've got. We'll talk to you again soon.